Hello everybody, this is PillarTrading.com, and today I just wanted to do a video regarding indicators and the magic indicators, the ones that you read about in technical analysis books from 20 years ago, the one that average retail traders continually lose money on. So I just wanted to show you exactly how price action trading benefits from these people, these amateurs trading off of indicators, and how professional traders take advantage of that. Let's just take a look at price action here from last week. These are just our areas of support and resistance from last week's videos, the targets that were hit, and then we had a change in price direction. Okay, we had a breakout of the trend, changed the midterm trend from bearish to bullish. But let's take a look at a couple of the setups here. Here we're going to start with number one here. Still short at this point. We were still anticipating lower lows from these 1078.25s. It looks like a breakout, but in fact was a measured move down into this larger measured move, anticipating lower lows. So the first short setup would have been here at 2 o'clock. It looked like a perfect move on the Fibonacci retracement trader screen. The price action was respected. Okay, let's just take a look at a classic indicator and what those people who trade off of that, the retail amateur traders, what they were thinking at this exact moment when the professionals were accumulating contracts to the short side. Okay, so we're just going to go up here, show the MACD. This is a classic MACD 1226.9, and you can see here works off of crossovers, and you can see here it had gone positive not long ago, right here at the very point where you didn't want to be buying any contracts. This was telling you that everything was fine, everything was going good, we were going to see higher highs. Okay, and if we zoom in, we can see it again. Right here, everything looks fantastic. Right where you are buying contracts from the professionals are selling those to you, getting rid or entering short positions using you, the MACD trader. And then right when it sells off, that move is respected. There's a crossover to the downside here. You can see it. This crossover here is telling you, the move is over. You need to get out. This is where this market is going to turn around and it's going to break down to the downside. That's what the MACD is telling you. Well, if you take a look at the opposite Fibonacci retracement, you can see here, we'll get rid of this one, that you are handing your contracts over to the professional traders. We are more than happy to take those contracts off of you. Right when it's telling you, MACD traders, right when this thing is telling you to get rid of your contracts, I'm the one that's taking them off your hands. I'm the one that wants those contracts because you don't realize what price action is doing. You're strictly looking at this indicator, which does absolutely nothing for profitable trading. It comes down here at the very moment you don't want to be selling, the very moment where the professionals are chomping at the bit to accumulate contracts, you are dishing them out, or you're getting stopped out, okay, and your market orders are triggered. That fuels this. Again, we move up, hit the target. Let's take a look at the next measured move. Surely it can't happen every time. We draw from here to most recent highs. Again, this crossover here tells you to get in to this move right here, okay? Say you get in on the second bar, which is a fantastic fill if you're a MACD person. You get in here after the crossover has initially started. It moves in your direction. So what do you do down here, who got filled here? You move your stop up to that level, okay? You move your stop to break even. You're going to ride this thing out to higher profits. It continues to climb, and this is where it starts. It's looking a little bit weak here. We're losing momentum. Oh no, what's happening? This is the big sell-off. This is the big sell-off. I don't want to get stopped out. Bang, you get stopped out right here, okay? Get rid of this. When your stop gets hit, market order is triggered. Panic is at its highest. You've got to find someone to take these contracts off your hands because this market is coming crashing down. It is going to just drop through the bottom. Get rid of your contracts as fast as you can. This is where the professionals step in, accumulate contracts off the people who have no idea what they're doing. For a small fee, I'm going to accumulate contracts. I'm going to take on the risk that it may drop out the bottom, even though I know it won't because I can see this support line down here at 67.25s. I'm going to take those contracts off your hands for a limited amount of time until you want them back. Okay? I will hold them for a brief period of time until I can give them straight back to you. And when do I give them straight back? Well, if you can see here, after you take these contracts down here, look for that crossover. That crossover happens on this bar, okay? So say you get in up here. My target is up here. So these people are accumulating contracts now here. They decided to get short at this crossover. Their stops fill our next move. They are what fuel the fire. Okay? They got out of their longs here. They got in short. Those shorts got stopped out. That triggers market orders up to our target up here, and that's where we get out of the market. We sell to someone who is thinking that they need to buy because this move is going up because they see strength down here on this indicator. These things, they just don't work. Okay? You want to look at anything, MACD, stochastics, they're all lagging indicators. Lagging indicators basically mean you are a debit card for professional traders. Every time you enter a trade, someone else on the opposite side is thinking, thank God I found this person. Thank God there are people out there still trading these indicators. So just be aware. We talk about it in the room, www.pillartrading.com. We talk about it in the live room all the time. Be aware of who is on the other side of your trades, what their purpose is, why they are getting into something. If you are accumulating contracts from professional traders, you are doing something wrong. You need to look at it, identify it. Where are the people that are making money? Where are they getting in? And why are they getting in? Something to think about, guys. These indicators, just a little video. If you are thinking about getting into trading and you are looking at these indicators, be very cautious of someone that touts them. Be very cautious of someone that teaches that sort of system, because they don't have any idea what they're doing. So it's just it's one of those things. It feeds on itself. People recommend these indicators. People trade off these indicators. They continually lose money, and the chain just continues. Capitalism at its finest. Survival of the fittest. People who don't have access to this knowledge just continually get crushed in the market, especially the futures market. It is the most technical, the highest level of skill to trade. So just be aware, and hopefully this will save somebody out there a little bit of money. And if you're interested in learning how the professionals trade, stop by the website. Again, www.pillartrading.com, and we'll try and get you educated. So that's it for today, guys. Hopefully we all have good trading this week, and I will see you in the next video.